Hi everybody, hi everyone. Welcome back to to us. I'm very happy to find you newly from this new video. It's been a while because you know that I'm not a full-time trader. I have also personal engagement on other side, and also I got some milestone, and it's part of life. And also I work on the on it beside I work some some a contract, and also I decided to build a newly a platform for GSTA, which I will present you over the next few weeks. We will see that a great platform there. We every people can like connect it and be. You can decide also if you want to be member and you to see all my like private contents, and then I will share to you the like signal and also like pretty much like great things as I post public for people. I will put some my position, the signal that we need to entry in the trade. So there you can also find some great scenario to getting profitable. I will let you know about that over the next few weeks, so don't worry about that. I'm not like JC is still there. We I will continue to post some content, some video to help the majority of retail trader to be profitable in fashion markets. So if you're first time to discover me, my name is Francois Ablé. I'm the main trainer and the founder of GSTA, which is a Global Street Trader Academy, which is a financial academy where I teach people how to trade stock, indices, option, forex, bonds, commodity, ETF, all the stuff for like portfolio management. And I'm very happy to find you back on this program. So now let's start with the disclaimer, and we will appreciate our program. So you have to very careful with the money that you put on the trading. It have to be the money that you can afford to lose. Otherwise, you cannot like going in this activity, because loss be part of this activity. You when you trade, you trade with the institute, so you have to manage your risk for losing money. And also very careful about also all the product that we manipulated as a forex, CFD, option, futures market, future contract, and all the stuff. So I'm assuming that you have notice of this disclaimer. Weekly market technical analysis 19 for the June, like April until the 9, the 4th June to 9 June. So as usual that I presented that this program before to going on this long moment, the forex, USD CAD, and the Dow Jones and gold and also Eurobond are the pretty much the major things that I presented. It's like it's past like very thing many things when I wasn't in the screen. I missed, unfortunately, lots of opportunity, but it's a part of the game. I'm assuming that you pretty much like taking advantage, because all the scenario, the pretty much scenario that I presented is being realized, materialized. And also the above all, the Eurobond, I will show you at the end of this show. We'll see that the perfect entry price for the Eurobond, why is a rally. And again, it was conditioning by the macroeconomic policy, and also conditioning by the political event. So one for trading, of course, it's good to know the technique, pattern, all the stuff, but you have also very careful with the fundamental analysis. That means you have to be aware where the market is supposed to go, right? The way of the market is supposed to go. You have to very careful with that. So let's see now for the USD CAD and the dollar and all the stuff. So pretty much the dollar has very progressed, because before to be absent on the few moment, we were there on the we were there on the dollar, and then we progressed. So two weeks of a progression, which is equivalent of 40 days, that we do higher and higher, and it pushing away, and we cross this chart, and we get off of this descending channel. So now we pretty much quite bullish on the US dollar index, and that's good. That means all the strategy that we will build it will be based on. So don't forget this graph, this chart of the US dollar, because the US dollar index is conditioning the markets. Okay, all the assets are fundamentally and technically based on this chart. That's why I show this chart each time, as soon of like as much. Okay, so as we see there, we're not buying again, we just waiting. That's the because yesterday when I analyzing this market, we were stuck on the Tenkan line here, the Tenkan curve, orange curve here, and then during the night we break it. So we're just waiting that the market will go to take a hint, like to be pushed on the support, which will represent the level of 11,900, which is the key June curve here, and then we can enter the market to buy. But if you want to do this strategy, which is good, you have also that means you shorting the indices like Dow Jones and others indices, and also that means you shorting the if you buy dollar, that means you short euro dollar, and we know that euro dollar it's based on the geopolitical risk, based on the political turmoil with the Spain and Italia, and it's looking like bearish, right? We of course we have some kind of a grade on the extreme party policy, which is the five star, and the Lega, which is extreme right and extreme left. They be kind of similarly a grade for the political events, and but it's not finished. So very careful with that. If it continue, for sure euro dollar will going down, and we can see also the dollar be strengthened. But also as the side of the political like the macroeconomic policy for the dollar, before this rally for the dollar, we just talked about the possibility, the likelihood to increase the rate interest for hiking to 3 to 4 times per day. Sorry, this year, and now we decrease this probability. We talk about the 2 to 3 hiking in the rate interest this year. So that means if we decrease the probability and the frequency for rate increase for rate interest time, that means we can see kind of weakness of the dollar. So that's why I warn you before that, because it's part of my scenario that I put on the table, and I show to you. I told you guys to very careful with the 12,000 resistance level. Look at that. We pretty much going here, since here to here. We was here, and I talk about this resistance, and then we coming here and we feel it, and then we just doing some pullback at the 11,900, and probably to going pressure movement to 12,000, and again 12,100. Okay, so why this particular level? Because it represents the SSA and SSB on the previous level, and also if you projected 26 period behind this lagging curve, you see that this level has particularly reacted on the time. So historically it's very a great level where we can take some position, some entry or decision. That's why we call POC. We will see on this program at the end what does mean POC. And but 12,000 on the US dollar index of the dollar represent a POC, which is a point of control, and also play a role as the 12,000. But broadly, POC is a kind of the buyers or accumulator, and sellers also are get caught. It's a kind of magnet zone. So this zone, it's very important. It's a crucial zone. So you have to be very careful with that when you decide to trade any market that you want. just looking first where is the potential POC. POC is a very great things for you. It will be save you money for sure, because you know that where the sellers, the buyers will react possibly if the market could go up or down. Okay, so I will let you know with the US dollar index, because I'm supposed that you understand my point of view on that. At the US dollar CAD, USD CAD, the Loni is pretty much my my one of my favorite forex that I follows as much. But this time I was like out of my screen, unfortunately, so I missed some opportunity. But it didn't doing like major things as we see, because before to leaving you guys, we was right there, we was like on this level, which is the blue line equal here, and then we, of course, we're going up, we're going down, but he would just like stay in the same level. It's kind of big doji on the monthly, and he didn't doing like a very great things or progress. So that's why for USD CAD, I will be also very careful with that. We stay out on the market just to see, because we pretty much see on the market that we are neutral. So that means the POC again on the great on the brown level here. If you waiting that the market we could going here to int this level, and then we can pretty much take a note to buy the market for scalping for sure. But if you want to go at the swing trading, just waiting the POC. That's why I will again we will show you, I will show you at the end of this program the $29,400 critical level, and representing the last monthly previously close. So we have this level represent the close of the April, the close of the May, and now we are June. So it's a 2-month close. So that means it's a very significant movement level. So then you can see here there we see that kind of we can it's based essentially of the dollar, because we saw that on the graph, the chart of dollar, it's going down to probably take a push, a support on the key June, the pink curve, the key June, and then it can going to again push the movement up. As we see here, we see that the width of the cloud is very like very wide open. It's a green, so that means we are quite bullish. So that means again of the USD CAD, you can come in here to take a support here, and then we can decided to buy this market. So just very careful and waiting just the time and the timing and the entry that we coming to take some rest here, and if you fail on this POC zone, which is $27,550 or $27,250, then we can take a note for buying this market potentially. That's my scenario that I share to you and free. So before to move on the USD 30, I will show you like the intraday, what does it look like. So look at that. It's quite of neutral, and looks that it will react on the $29, which is a psychologically level here. Look here, as we see it reacted, and if you break it, because we have here like a bullish, quite of bullish signal, kind of a rally, you know, to rally here. So that means if you retrace that, it's possibly the time for shorting USD CAD at the scalping. I'm just insist on that. It's just for scalping, because on this level you cannot like entry the market to do some swing trading and intraday. It's a very risky. If you want trade for swing trading, or you want trade for intraday or day trading, just waiting the POC here as I put for you, which is one test, 2 test, 3 test. Okay, we have also here a bullish movement here. Okay, and we have also very work zone here, We have also like pivot zone here. So we have like support, resistance, alternate, and that's why I call POC. So just waiting that we coming here, and then you can, if you fail it, you can entry here to buy, or if you break it this POC, then it's sell off market, then you can short in until this level, until here, okay, or here. So it could be a great risk reward ratio. If you break it, you put your stop here and you shorting into here or here, okay. So that's my scenario for USD CAD, but it's essentially based on the shape of the dollar. So very careful with that. For trading this pair, you have to be like keep in touch the dollar chart beside as you trade. Otherwise, you will be like, you will probably piss off if you don't very careful with that. So at the USD 30, which is the CFD of the Dow Jones, is a pretty much the same thing as I was showing you before to be absent. We have like a descending channel, which is we continue to be here. Some people they will I will just show you the Ishimoku just to see to show you the trap. Look at that. So some people which is trade like technical pattern at the chartism, they will intend to buy this market, but it's completely a mistake, right? Don't do this mistake, because we not pass clearly this descending channel. So if I reactivated the indicators for Ishimoku, we see that here the lagging span, so the lagging curve, he didn't like cross the chart and didn't get off of this descending channel here, right? So that means the market could going here at the top of the Kijun line and the clustered with the Tenkan curve, and it can fail it. It can fail it, and the market could short this level at the 23,540 to 24,780, which is a 240 points intraday scalping zone. That's why I put here, because if you day trader, don't trade in this market, just stay out the market and waiting the perfect entry as I put for you here. If we see clearly that the lagging span curve cross all the way this chart, or maybe if you want it, you can just wait that we can take a hint at the blue line equa here, which is represent the monthly close for May, and then you can intend to buy the market and the scalping. For Dow Jones right now, we cannot work on it on like any strategy like for swing trading or day trading or intraday. It's just for scalping. I will show you quickly on the 5 minutes for people which is doing scalping. We have a gray zone here, so it could be kind of mess zone. We see definitely that of course we have a green line here, green cloud here, and we see that the market progress on top. So that means theoretically that the Ishimoku show that we have a trend line, right? But also look at the shape of the graph. It's show you that we are on a quite range. So that means if you buy it or short it like anywhere level, you'll be trapped, you'll be fooled. So just waiting that we break it this level on the top on the breakout strategy, then you can buy it. And if you buy it here, look at this bulwark to see to going to see, it's sky is a is a sky the limit, right? And that means you have to be very careful with that. As I show you at the five time frame 5 is quite like a long movement, right? But if you going to the daily, you will see that it's just very a small range movement. So that's why I show you here. Look at it. You know that it's oriented to going up, right? So just waiting that we break it, this oblique resistance here, and then we can buy here on the top. That's suppose that the lagging span cross this pattern to going out of descending channel, and then you can take your entry to going to looking for this great red zone, which is 25,290. Okay, so this level, but you have this room to going to for looking for. So just very patient with that. It will be worth, because you won't be trapped. And this signal, which is presented previously 26 period behind the this graph, this chart, you see the lagging span, we can cross this line and get out of the descending channel. Otherwise, if you're going there and we fell here, you can just short in these markets. Okay, is it technically? Because here yes, of course, some people ask me about that. We see some kind of the open of the cloud, which is show you like great things. It might be like a kind of possibly a bullish movement, but very careful also with the news, and also with, of course, Donald Trump tweet, right, on the war trade between all the country implicated, with the retailery between Canada on the steel and nuts, and also on the pork and soya bean on the United States, and also the possibility war trade again with China and the United States. So this event, political event, and this political turmoil, or also this macroeconomic impact, could massively and definitively like get full our strategy technically that we put. That's why I strongly recommend you to take a note for fundamentally analysis before to use technical analysis, because technical analysis giving us some a perfect entry is optimizing our timing, but the fundamentally analysis show us where the market could possibly go before the pulse of the market, right? So very careful with that. I will for sure talk you about over the next coming days if the Dow Jones could go up or possibly going down. It depends on the level that I will show you, right? And if you look at here, we have a kind of double bottom on the blue line here, and it goes to probably int this resistance with the SSB, right? SSB, because we're going down, and when we're going up, this is SSB on the green, and it become SSA. So if you're going to SSB and you fail it, then you can possibly enter the short. But at this moment, I recommend you to stay out of this market. So gold, it's pretty much also the same thing that I left before that I was in the screen. We see that gold, it's pretty much the strategy I recommend you over the past few days. That we have strategy for accumulative, and we're buying each low, like the low of the historically low, which is 1,250, which is the perfect entry low. We have also the 1,284, which is the quarterly low. Then you can buy it here. And so each low that we did on the gold, we just like looking for to buy it, because we saw that the gold is oriented to be bullish on this time, because as a policy of the actual president of the United States, Mr. Donald Trump, is looking for to look the dollar very cheap, as is called, make dollar great again, right? So if the dollar it's very cheap, that means all the commodity base or backed to dollar will be soar, right? And that's why we just like in type of strategy that we wanted buy gold. We just want buy. We're just looking to buy gold. Each low we buy, and we saw high here that we on above the clouds of Ishimoku cloud with green here, and then we are just waiting that we get off of this level, and then we can anticipate you to buy. So here we saw that behind or below this level here, we have a clustered with the Tenkan curve and also the Ishimoku curve, which is pink and orange. That means we will possibly reintegrate it. I'm not a specialist of Ishimoku, but I use it as much as possible, because Ishimoku show us like how the market is equilibrate or is just disequilibrate, you know. So that's why I'm just use this technical indicator, because he gave us to me like he gave us so many information to that we can take an advantage for trading, of course. So my scenario on goal is to be bullish, but I'm just winning about the perfect entry or the best low to entry on this market. So we will finish with this rubric with the Eurobond. So Eurobond could like frustrated me because I missed this fantastic opportunity. That's why I will talk you as much before that we will get this scenario. I told you guys before, if you see my previous video, that to just looking for to buy bond on the low, because the political turmoil reinforce the possibility for to increase the possible level of debt, with also Spain and also the Italia, which is reinforce the skepticism to leave euro, right? So the like France and Germany, which is like the strong country and the best country and strong economy of the Europe, we won't be backed if will be back to the debt if Italia decided to leave euro. Is a pretty much the same situation for the Greece, right, with Alexander Tsipras. So we saw kind of possible the same scenario. So that's why we saw that the Eurobond like rally. And look at that technically how what is it get. So we have 1 here, 2 here, 3 here, 4 and 5. Look at that as a perfectly entry. Then you can buy here like very easy, and we will see just the market going up. And this kind of trade, guys, is not coming like often, and I miss it, unfortunately. But I am assuming that all of you guys, or a couple of you, have this kind of entry, because in my previous video I talked about the possibility to have a double bottom on this Eurobond, and to buy just each low that we can have. So this like some low here, as we got some range. The range here we discussed so many like long times before, and we break it, and then we have also a kind of this level that we buy it. Okay, so that's my my frustration for this market, but it's okay. It's a part of the game, but very careful with that. And we are also stuck on the the pink line, which is represent the monthly close, and the POC again on the like the 161.50, which is the POC and the monthly close, and also the support and resistance level, which is orange line, where people can like is technically it showed the neckline, of course, of the double bottom pattern, but it also the level is a pivot point where market can decide to going up again, so to be going up or to going down, and then if you break it, it could like be sell off and going to also the next orange line, which is the dollar 157 point. Okay, so that will be all for this presentation for today. So let's see now the recaps. So for the weekly summary for this weekend, USD CAD and Dow Jones, I recommend you to stay out of this market. At the long term of our technical for the USD Dow Jones, you have the like neutral to bullish, and the gold is neutral to bearish, because we saw that if the gold, if the dollar like reinforce a bit like on the short term, and then the gold will be shorted for sure. It's inverted correlated as a same thing at the kind of major pair of forex, and also the Dow Jones, the indices. And real bond, it's neutral for now, because we're just waiting the signal with POC or the signal level, and to be bullish on the long term, right? So that's why I take it, I do my effort to put you here the key level to watch for USD CAD, $29,400 and $30 signal. So when I put signal, what that mean exactly? What that mean is, when I put $29 on 400, it means that you have just waiting to be patient, and waiting that the market will come to come into this level, and then you can decide it. If the market fail it, you can decide to buy, or also if you break it this key level, then you short. It's just that I've just like easily like make for you for the market, because there are so many levels to watch. So I just like filter for you, and I put clearly the best level to watch. That's why I call key level to watch. And the POC, it's the level where the market is supposed to react, like where the sellers and the buyers get caught, and they struggle together, and then the side which is win, then we push the movement with the side that which we win this struggle. That's why we call POC, which is a point of control, is a magnet zone. So between the POC and the key level, like between $27,250 and $29,400, if with the market going like this, you can decide to stay out the market, or also you can decide to play as a scalping. So you buy at the low for the POC, and you get out of the key the signal for the key zone. And if you break at the key zone, then you can buy it, right? And if you also reintegrate and we break again the POC, then you can short it. So you have a two level to watch. Okay, so that's why I put some you. So I will thank you guys for watching this video, and it was for great pleasure for me to see you and to coming back. So don't worry, GSTA still there. I will continue to send to put for you contents, and to share my plan, my scenario. And I will also talk to you over the next 3 weeks the new platform for GSTA website that I built, and I'm currently building that, and I will discuss with you over the next few weeks and in video to show you how you can you can go there and you can be a member to receive for receiving some signal, some scenario as I put for you. It won't be like all the content that I put you free. So I will some people which, if we are interested to going further, you will receive a private scenario plan for trading, and also where I'm clearly entry, and you can duplicate it if you want it. So I will talk to you about that the next few weeks. And so thank you again for watching this video. Don't forget to comment, let a comment below the video. Share it to the friends, a plan which is interested for trading, and also put some a note, a comment at the review section for Facebook. That mean like show me how much this program is interesting, and also it also helped me to improve the quality of this video. So I thank you so much for watching this video. It was François, GSTA Canada. It's 8:45 a.m. Thank you so much. Have a great day.